What's the matter, Jim? Brenda and HR got you pushing too many pencils? Right? Am I right or am I right? I think I'm right. What's up, Invest Maniacs? Knight Rider here, and today we've got your Robinhood Snacks stock market update of the day. We're getting 59 distinct new emojis this year. Start peppering them into your Slack game. The Office Chat Pioneer began trading on the New York Stock Exchange Friday, just as markets enjoyed record high stock prices. Slack jumps 49% on day one of trading after its not IPO. 7 years from now, Office email will be dead. That's the bold prediction from Slack CEO/founder Stuart Butfield. His messaging platform for office distraction, productivity, states its purpose elegantly in its S1. That's the required paperwork for a company to go public. Slack says it replaces the use of email inside the organization, and the stock popped 49% after its first day of trading as a public company. Fun facts: Slack was an accident. Butfield created I swear I'm like 7 years old. Butfield created an online game called Glitch. He realized the messaging feature in the game had potential, so he focused on what ultimately became Slack. It's an acronym, stands for Searchable Log of All Conversation and Knowledge, which is not very inspiring. Kind of sounds to me like something that computer from the Hitchhiker's Guide, you ask it, what is your purpose, computer? To create a searchable log of all known conversation and knowledge. Interesting numbers. Slack boasts 10 million daily users and 95,000 paying accounts. Its biggest customers pay $100,000 plus annually, and Slack's got 93% more of those whales than last year, 645 as of April. Revenues almost doubled last year to $400 million, but the business generated a loss of $140 million. One big question: why the direct listing? Slack didn't IPO to become public as most companies would. Following the path Spotify carved out last year, Slack listed shares directly. That's cheaper. You don't have to pay bank fees to take you public because you don't raise new money. It's a rare move that Spotify or Slack can pull off since they don't need new cash, and their brands are strong enough that they don't need a pre-IPO roadshow to get to know investors. The takeaway? Slack's all about the ROC. That's return on communication. Slack dropped that reference in the S1. Its core pitch is that your company feels empowered by slacking, which leads to more communication, which leads to more productivity, which leads to more business, at least theoretically. Meanwhile, Microsoft with Teams and Facebook with Workplace want in on the conversation. Up next, dividend stocks are living their best lives thanks to the Fed. So we're cutting rates now? Wednesday, America's central bank set the stage to reduce interest rates nationwide later this summer. It's a sign those wise government bankers are concerned the trade war could hurt the economy. So they're saying, we've got your back. Lower rates would support borrowing, potentially offsetting trade war pain. The Fed hasn't cut interest rates yet, but markets are acting like they have. Mortgage rates. A 30-year house loan had a 5% average interest rate in November. Now it's down to 3.86%, close to a record low level. 10-year U.S. government bonds. The interest the government pays for 10-year loans dropped below 2% yesterday for the first time since 2016. We're talking supremely unsexy industries. Electric utilities, packaged goods, wireless. Lower rates could change that. NextEra Energy, Procter & Gamble, and Verizon don't have the cachet of self-driving meal kit startups these days, but they all boast profitable track records and hook up shareholders with cash dividends every quarter. Most fast-growing companies don't pay dividends at all. The takeaway? Everything's relative. The dividends of these companies haven't changed much since December, but interest rates overall have. With lower rates today compared to December, these dividends look good to investors that just want reliable cash payments. That's why the Fed's words Wednesday are bringing sexy back. Up next, we've got Netflix. Netflix's Sandler Aniston flick reveals some valuable numbers and intel. Less chill. Netflix whipped up a new comedy over the weekend featuring Adam Sandler and Jennifer Aniston. Murder Mystery was Netflix's biggest opening weekend original movie yet. Critics didn't love the story, but we loved the numbers Netflix reveals. It rarely shares info like this. Here are the personal records Netflix set. 30.9 million viewers in 3 days. That was 10% of all Netflix views. Over half were from outside the US. FYI, getting through 70% of the movie counts as a watch. I'll also take a side note and say that I think Netflix made a good deal to get Adam Sandler, because he's known for being a comic who does well overseas. Typically, U.S. comedies don't do particularly well overseas compared to, say, like action movies. But Adam Sandler, because of the type of comedy he does, it's a little bit more lowbrow, a little bit more physical, and that translates a little bit better international. And since Netflix is a worldwide company, he was a good comedian to choose if you're going to do comedy. Pressure is on. Netflix is showing off its latest win because everyone's jumping on the streaming couch. Amazon, Hulu, Comcast, and AT&T's HBO, they're all pushing streaming options as you cut the cord. And Disney's pulling its own magical content from Netflix as it launches its own Disney Plus in November. The takeaway: Netflix's home screen is the most valuable billboard ever. As it jumps deeper into original content, it's also jumping into competition with Lionsgate, 20th Century Fox, and other movie producers. Netflix's new competitive advantage is that it owns its whole ecosystem. Instead of paying for ads and buying trailer spots, it just sticks Murder Mystery at the top of your screen, its homepage, to ease your viewing decision stress. And here is your snack fact of the day. Since 2008, 9,696 data breaches occurred across the United States, involving more than 10.7 billion records. Each lost stolen record costs an average of $148, which amounts to more than $1.6 trillion in value destroyed, which is why here at Investmania, we like the cybersecurity sector or industry, and my favorite stock in that industry is CyberArk. Hope you guys have a great day.